Hi guys, it's your Sir Kevin O again, and we will be continuing our discussion on leases IFRS 16. Nasa part 3 na po tayo, it's sale and leaseback. So let me run you through a few important terminologies and tips on how to answer sale and leaseback problems and theory questions. Una, let's go through the important concepts on sale and leaseback muna. First, of course, you need to know that a sale and leaseback is a lease contract between a seller-lessee and a buyer-lessor. Ano yun? Seller-lessee and buyer-lessor. I know you understand those words, pero there may be some implications that need clarification. A sale and leaseback is an agreement whereby a party, the seller-lessee, transfers a property, then immediately leases it from the buyer. So, may nagbenta ng isang property pero nirentahan niya ulit in a tenant capacity. So, seller naging lessee. This gets confusing at times, especially the seller becomes the lessee and the buyer becomes the lessor. So, ang situation po, if it were an ordinary sale, kung walang seller, lessee, buyer, lessor sana, the seller does not have a problem because the asset is simply transferred to the buyer. Okay? Pero that's for an ordinary sale. In sale and leaseback, a seller-lessee will still retain possession of the asset. For example, if it's a building, binenta niya yung building pero nag-lease siya sa building, meaning mag-o-occupy pa rin si seller-lessee sa building. So, it's like hindi niya give up yung usufructuary of that building. It gets confusing at times na kanino na po yung ownership ng building, it's with the buyer. Pero who is still using it? It's still the seller-lessee. Okay? The buyer-lessor only have, right now, the ownership. Pero again, clarify natin yan later. A piece of good news. The lessor's accounting between an ordinary lease and leaseback will not differ. So ano yung ordinary lease na tinutukoy mo dito, sir? This is the previous discussion that we have on lessor accounting in the part 2 of this video series. So, kung ano ang natutunan mo dun, yun na din yung lessor accounting kung sa sale and leaseback tayo. This is a relief to students concerning lessor accounting kasi whether ordinary lease or sale and leaseback, it's the same accounting, IFRS 16. On the other hand, the lessee will account for the leaseback taking into consideration any rights retained and rights transferred. Now, I know these are terminologies that you might have heard just now or a few times already, so it could be some bad news for you. Pero wag na kayo malungkot, guys. We will run you through the important concepts and problem-solving tips later on sa, of course, problem-solving natin. So let's have a side-by-side comparison of what is happening in a sale and leaseback in comparison to a sale. In a contract of sale, the asset sold is transferred to the buyer wholly. So if this is our illustration that I'm using, between the seller and the buyer, after the sale is completed, that asset becomes the buyer's property in whole. Now when we compare that to a leaseback agreement, the seller-lessee does not wholly transfer the asset. Yes, he will transfer what we call the ownership of the asset, pero despite giving up ownership, the seller-lessee will still record a portion of the asset representing its usufructuary. So, ano to? It's like the saying na wag mong ibigay lahat, magtira ka naman ng konti para sa sarili mo. That's it. So, right of use asset, ito po ang portion that represents the usufructuary that the seller-lessee retains. Because take note again, even if you already sold the asset, you're still using it right now because you leased it back. Okay? Buyer-lessor, simply the buyer-lessor will have the ownership or title to the asset and he will account for this lease as if it's an ordinary lease. Okay, whatever is his accounting policy on that, direct financing or sales type lease. Pero ang problema talaga natin guys is in the seller-lessee accounting, wherein we will have to keep note of rights transferred and rights retained. So let's run through the important notes. Una, alam natin that a lessee will account for lease liability, di ba? And a piece of good news, another one, the computation is the same as ordinary lease. So, hooray! Kung ano ang natutunan mo sa part 1 or in lease accounting, lessee side, finance lease, operating lease, it's the same. The same computation for lease liability. So, sira na ba talaga yung bago dito? Well, alam mo kung anong partner ni lease liability, di ba? That is right of use asset. Dito po magkakatalo. Kasi in right of use asset, the lessee will only include as asset the portion that pertains to rights retained by the lessee. So kung ano lang ang ni-retain na rights, yun lang po ang magiging ROA natin. Remember the illustration earlier? You gave up ownership but you retain something. That is the usufructuary. And that something can be expressed into mathematical equation, guys. Your ROA can be equal to this. Remember this formula? ROA is equal to lease liability over asset fair value multiplied by carrying amount. So ano ibig sabihin nito? If I may analyze, guys, ang ginagawa natin, we are separating the portion of the carrying amount that pertains to the amount na babayaran natin. Ito yung lease liability, di ba? That's the portion that we will be paying over the fair value or the total value of the asset. Ito po ang ginagawa. You are trying to allocate what portion of the carrying amount did we retain by multiplying it with the amount that we are willing to pay over the total value of the asset. But I won't go into too much concept in there, guys, kasi as regards to the wisdom of the topic, hindi naman masyadong tinatanong sa board exam yan, ano? Yung tinatanong lang talaga is the general concept that is set in stone sa standards natin. Not really set in stone, pero written in the standards. Okay, ROA is equal to lease liability over asset fair value multiplied by asset carrying amount. This is the valuation of our right of use asset. Pero guys, our denominator here, asset fair value, is not actually fixed. Okay? Kasi normally, under normal circumstances, ang denominator natin dapat is sales or the selling price of our asset sold in this sale and leaseback transaction. Pero I instead used the term fair value because it will always override your sales. Only use sales as the denominator if fair value is not given. So take note of this. Ang formula na to po magbabago kung hindi given ang fair value. Pero it is rather uncommon for a sale and leaseback problem to not have asset fair value given. Pero if in case may ma-encounter ka na ganito, only use sales if the fair value is not given. If both of them are given. May sales figure, of course, palagi sa sale and leaseback, palagi sasabihin yan, the asset was sold for this amount, so and so. Tapos, pag binigay din yung fair value, guys, there is something that you need to verify. You have to verify, is the selling price equal to the fair value of the asset? Any reasonable merchant or any reasonable buyer and seller will agree to sell the asset at its correct value. That's the fair value, di ba? We will have a problem if the asset is not sold at fair value. Kasi the resulting difference can either become, in sale and leaseback the difference between fair value and selling price can either be a prepayment or financing. In which case, if the selling price is not equal to the fair value, our formula will have the additional component of kung ano ang difference ng fair value sa ka-selling price natin. Okay, wag magpanic. The formula that is presented below is simply an expounded version of the formula above. They are not different formulas. If I may, I can just cross out this one kasi I know some students are fond of memorizing, ano? Kung meron kang gusto i-memorize na formula, please do memorize this one. I do not really advise memorization, pero if that's your thing, then this is the complete formula for ROA. Lease liability, you already know how to compute that. Asset fair value, ibibigay yan. Carrying amount, ibibigay din yan. Pero what is not yet known to you right now is the prepayment and financing. That is something new. So let me go ahead and explain that. Prepayment. Pag sinabing prepayment po, it is the fair value of the asset minus selling price in a situation where the fair value is greater. So ano ulit? Pag mas mataas ang fair value kaysa sa selling price, we call that prepayment. And that prepayment is added to the lease liability. Prepayment. It is a situation where the seller lessee was willing to sell the asset at an amount lower than fair value. So get that into your head, ano? Willing ka ibenta yung asset mo at lower than its value, nalugi ka, di ba? Well, in sale and leaseback, that is not really a kalugian. That is a prepayment. Kumbaga, initial down payment mo to in this sale and leaseback or in the lease portion of the leaseback. But again, lesser words, lesser concerns for you to understand, ano? Kung gusto mo memoryahin to, just note the difference of the fair value and selling price. Yan, i-add mo yan sa lease liability to get the ROA formula. Also, an alternative situation is that there may be a difference between the selling price and fair value of the asset where the selling price is greater. And we call that financing. Ano ibig sabihin nito? You were able to sell the asset at greater than its actual value. So ano yun? Parang binigyan ka ng favor ni buyer-lessor. Okay? Sinabi ni lessor, because it's you, okay, I will be buying the property from you at a greater amount. Well, actually guys, that greater amount is a benefit. It is a financing, additional financing na ibibigay ni buyer-lessor sa'yo. But that also means that you sold the asset or ang effect nito actually guys, magiging lower ang ROA mo. Okay, pag may prepayment, mas higher ang ROA natin. Kapag may financing, lower ang ROA natin. And it should also go with common sense that these two will not exist in one problem together. In a problem, you can either have prepayment only or financing only. So, binigay ko lang ang formula na to for you to be able to apply this to any situation. Okay? There could be other better formulas up here. Pero maybe just ask me or ask your teachers on how we can improve this one. I may be able to give you, pero it needs much more explanations. For now, you can stick with this. Okay? So, let's proceed. Do not worry. Siguro this is something na nakakalito sa inyo. Pero just take note guys that this is just you getting to be familiar with the fair value and selling price difference. Also take note that if the selling price is equal to the fair value, you don't need to be concerned with this. So, sir, what if di given ang fair value? What if hindi binigay yung fair value? O edi wala kang problem. Kasi the assumption is, if the fair value is not given, the selling price is equal to the fair value. Okay? So, problem solved. Do not assume that they are not equal if the fair value is not given. Okay, proceed tayo. Leaseback is a complex transaction. And since it is one part sale and one part lease, Kanina yung pinag-usapan natin, yung lease liab, tapos yung ROA, that is the lease portion of the leaseback, ano? Well, the lessee also needs to account for the implications involved in the sale of the asset. So, binenta mo yung asset, di ba? So, maybe the result of that sale also has some implications. Enter another term that you need to keep note. Gain on rights transferred. The lease portion will account for rights retained. Pero the sale portion of a leaseback, you will need to worry of rights transferred. The seller lessee accounts for a gain or loss on sale of the asset, but the gain or loss can only be recognized only to the extent of the rights transferred. In short, wala ka pong naintindihan dyan. So, let's just go and proceed into the formula, which is what you are waiting for. Ano? Gain on rights transferred, which I will be referring to here as GRT, is equal to the fair value of the asset minus lease liab over asset fair value multiplied by the gain on sale. Okay, sir, how about if the fair value is not given? You replace fair value with selling price. That is an important note. Kung hindi given yung fair value, you replace it with selling price. Because ano ulit yung assumption? Kapag walang fair value na given, the selling price is equal to fair value. That formula puts into numbers this portion here. That is rights transferred actually. The ratio of rights that we are able to transfer. Actually, fair value minus lease liability is the rights transferred. But if you divide it with asset fair value, that becomes a ratio. Okay, i-multiply mo yung ratio na yan with the gain on sale, you will get the portion of the gain that relates to the rights transferred. To expound this one, if the selling price is not equal to the fair value, you also need to account for any prepayment and financing. And I have explained what it means earlier, yung prepayment and financing. Pero this is something that is new to you. Adjusted total gain. Kanina gain on sale, that is understandable, di ba? What is gain on sale? It is simply selling price minus carrying amount. That's gain on sale. And I know you know that already. If you sell a PPE item, selling price minus carrying amount is gain. Pero, if the selling price is not equal to the fair value, do not use the selling price. Instead, fair value po ang gamitin mo in computing this adjusted total gain. ATG for short. Okay, relax. I know this is a lot to take, pero I would suggest guys, for starters, pag magsosolve ka ng problems, isulat mo muna yung formula so that before you even start solving, you have a starting point. Okay? You can map out the problem first. After mo isulat yung formula, basahin mo yung given, tapos you ascertain, is the fair value equal to the selling price? May prepayment ba ako? May financing ba ako? You start worrying about those things. So right now, let us proceed into problems para ma-explain ko sa inyo what is this GRT, what is this ROA computation, rights transferred, rights retained. Okay? Problems tayo. Okay guys, here we are now, problems about sale and leaseback. We start off with an illustrative problem first before we go to your handout. And right off the bat, let me remind you that the only difference between an ordinary lease and a leaseback transaction in terms of accounting is the computation of your right of use asset and the gain on rights transferred. Between lessor and lessee, sa lessee side lang po merong difference. Lessor will still account for a leaseback in the same manner as he accounts for an ordinary lease. Pareho pa rin yung thought process. Operating finance, sales type, or direct financing, etc. So you don't need to worry about the lessor. Kay lessee ka po, magpo-problema. You will still have to classify operating lease and finance lease, of course. With the thing in mind is that you have, generally all leases are classified as finance lease. Diba? Yun yun. And when you conclude that the lessee used finance lease, in a leaseback transaction, magkapareho pa rin ang computation natin sa lease liability. For that, I already computed it para di na tayo mahirapan. Ang naiba lang kasi talaga is the right of use asset and the addition of another requirement na itatanong sa'yo, the gain on rights transferred. Because frankly speaking, the difference between an ordinary lease and the sale and leaseback is the sale component. And that has also an effect on the asset because if you would imagine this, a leaseback is a sale of your own asset and then you will release that asset. I mean, lease back that asset. So parang nagkakaroon ng complication in terms of the ownership transfer and the ownership retention. But with all of that being said, let us proceed with this problem. Chan Chavez Incorporated has the information on a leaseback of an equipment. The requirements are down below. Inuna ko na po kanina, pero balik tayo sa taas. The carrying amount of the equipment is 900,000. The fair value is 1 million. The selling price is also 1 million. Okay? Once you stumble upon these pieces of information, guys, fair value of the equipment and selling price, it is very important to keep in mind if they are equal or not equal. Kapag equal ang fair value with the selling price, which is the default na agreement between buyer and seller, arm's length transaction, then you can rest easier because our formula will be a bit simpler. We'll get to that when we compute, Fair value selling price. Equal. You say, hi, salamat, equal. Lease term is 3 years. Annual lease payments, 250. Rate implicit to the lease is 12% and the pre-B annuity of 1 is 2.4018. To which, guys, since ang lease liability, the computation is LOG, present value of lease payments, option, and guaranteed residual value. Tapos, isa lang ang present dito. We only have the annual lease payments. I-multiply lang natin yan with the PV of annuity. You will get the lease liab. Ayan. For the amount 600,000, 458. As simple as that. Okay? Now let us focus on the peculiar requirements. Right of use asset. In a leaseback transaction, where the selling price is equal to the fair value of the equipment or of the leased asset, your ROA can simply be computed using the following formula. Ito siya. Your ROA is simply equal to the lease liability divided by the asset fair value. Spoiler alert, ang ibig sabihin po ng division na to is you are trying to compute the ratio of rights retained. Lease liab over fair value of the asset is rights retained. Magkano ba ang rights na niretain ko? Magkano ang rights na bibilhin ko? Because do take note, ang lease liability, babayaran mo yan. The amount you are willing to pay over the total value of the asset is the rights you are willing to retain. I will not explain that one any further because I don't think I can really. I will just go in circles with that. Let me proceed. Pagkatapos mo makuha yung rights retained, i-multiply mo siya by the asset carrying amount so that you will know how much carrying amount you need to record, how much carrying amount you retained. It goes like this. Your ROA is simply equal to the lease liability over the fair value of the asset multiplied by our carrying amount. Ano ulit? Kinukuha mo ang portion ng carrying amount that relates to the rights retained. Because that will be your right of use asset. In the end, we get 540,412. Ito po yung amount na marirecord natin as a debit to ROA while crediting lease liability and also crediting or debiting gain or loss on rights transferred. To that, medyo may complications pa ng konti because do take note, the sale and the leaseback happens at the same time. And your entry for the sale and the leaseback is actually only one entry. I will not be illustrating the entry. I will let you reconstruct it. But I'm pretty sure you can. ROA, ito ang computation natin for ROA, again in a scenario wherein the fair value is equal to the selling price. And right now, let us answer the third requirement, which is the gain on rights transferred. Let me just put the final answer here so that when we review later, we can immediately see it. GRT, gain on rights transferred, will be computed as follows. In a scenario where the fair value is equal to the selling price, your GRT has a simpler formula. Believe me, there will be a little bit of an extended formula later. Ito po. Before we even compute gain on rights transferred, we first have to know magkano yung gain on sale. Gain on sale is like an as-if scenario. What if ang transaction is an as-if sale? Paano kung ordinary sale ang nangyari? Magkano sana yung yung selling price minus carrying amount? Ay tawag na ito gain on sale natin. Magkano sana ang gain na marireceive or marirecognize natin kung sale lang to? Naked sale lang without the leaseback. We could have recognized 100,000 from an ordinary sale. Okay? If this was an ordinary sale. Pero guys, in leaseback, that 100,000 will have to be divided into two components. The gain from the rights transferred and the gain that relates to rights retained. Gain on rights transferred and gains on rights retained. I will tell you right here and now, the only gain that we will recognize from a leaseback is those gains that relate to the rights transferred. Any gains from rights retained is not recognized. I'll have it clear with you right now na ang 100,000 po na gain on sale natin, i-divide natin yan into two components. And the only component that will be recorded is the gain on rights transferred. So, let's proceed to the computation. Gain on rights transferred is equal to the fair value of the asset minus lease liability. Before I move any further, guys, let me explain what this fraction is all about. So, tinatanggal mo ang lease liability from the fair value. Ano ibig sabihin neto? This deduction actually, guys, is you're trying to find the portion of the asset that you are not willing to pay back for. It actually pertains to the rights you transferred. Kasi, the amount that you are willing to pay is recognized as your ROA, di ba? Ito yung rights retained mo. Pag tinanggal mo yung rights retained mo from the entire value of the asset, that constitutes rights transferred. And kung ano yung rights transferred mo, yun ang merong gain. Ito ang gagamitin natin to compute your gain on sale. Okay? That divided by the total fair value is a ratio on rights transferred. Tapos i-multiply mo yan by the gain on sale, you are actually trying to get the portion of the gain on sale that relates only to the rights transferred. That, again, to complete the formula, divide this by the fair value and let me encase this one in parenthesis kasi alams na, PEMDAS. Multiply it by the gain on sale of 100,000. I will get the portion of this gain on sale that relates to rights transferred only. This 39,000 is GRT. It is the only amount that is going to be recorded as a gain from this sale and leaseback. Their difference of 100,000 minus the GRT is called gain on rights retained. It is not recognized. Okay, again, I'll have that clear. You do not recognize this as a gain. In fact, you don't even need to pay attention to it. That is how you compute GRT. Follow the simple formula, pero do take note, this formula applies if the fair value and the selling price is equal. So, to finalize our answers, in a scenario where the fair value and selling price is equal, ito po ang answers natin. You can try to recompute this using our formulas. It is also in the slides that I presented to you earlier. Next, what if I edited the problem slightly and it turns out the only thing that changed is this one? Kasi pwede naman ganito mangyari, di ba? Mag-agree si lessor saka si lessee na ang selling price is 1,200,000 kasi contractual naman yung selling price. Depende sa ano ang pinag-agrihan nyo. Everything else remains the same. In fact, your lease liability will remain the same. The only difference really here is the selling price. And because of that, the selling price is no longer equal to the fair value of the asset. Okay, selling price is greater than the fair value of the equipment. When this happens, guys, you need to consult a código that I am going to present to you right now. When the selling price is not equal to the fair value, you will have either a prepayment or financing. Asset fair value minus selling price is equal to prepayment where the fair value is greater. So pag mas mataas si fair value, that is called prepayment. Pero kung si selling price naman yung mas mataas, that is what we call financing. Selling price minus fair value. In short, you are only taking their difference, and that can either be a prepayment or a financing. And when prepayment and financing is present, there will be a slight difference in our formulas for right of use asset and for gain on rights transferred. Let's start first with our ROA. Actually, everything is the same except for two things na na-add. Kasi pag may prepayment or financing, you will need to consider the numerator. A few modifications on the numerator. Lease liability plus prepayment minus financing. Kanina, kung equal yan sana, ito lang, lease liab lang. Pero since may na-add sa scenario natin, kung prepayment, i-add mo, kung financing, i-deduct mo. That's basically it. And in this problem, the selling price is greater than the fair value, which means that there is financing. Selling price greater than the fair value. Now, when there is financing, what do you do with that? This one is actually deducted from our lease liability in order to arrive at our ROA. Okay? Ulit, selling price greater than fair value. Then go ahead. That is a financing. Your computation of the ROA will be altered, but the alteration will only be on the numerator as follows. The liability will have to be reduced by the amount of financing. Ito yung numerator natin. Lease liab plus prepayment minus financing. And since there is no prepayment, zero yan sila. Well, actually, guys, prepayment or financing to, because they can't exist in one problem. You either have prepayment or financing. That will be divided by the total fair value of the asset. And all of this will be multiplied by our asset carrying amount. The only difference is you deduct the financing from the lease liability. Everything else is virtually the same. But because of that, this will also influence the amount that you can recognize as your right of use asset. Observe here, guys, our ROA is now equal to 360,412. When there is financing, it actually results to our ROA being lower than when financing did not exist. Okay, kung walang financing, ito yung natin, right of use asset. Pero since nagkaroon tayo ng financing, ito na po, 360. In short, if there is financing, it results to your asset being lower. Okay? Yan. When you have greater selling price, a portion of your right of use asset will be removed. Now, ano yung magiging effect niya sa gain natin? So let's compare formulas first. This is the formula for gain on rights transferred when there is financing. This is actually financing. Sorry if I put it in the wrong area. When financing is present, our numerator is fair value minus liability. That is for kung walang financing, fair value minus lease liability. Pag merong financing or prepayment, you will have to edit that a little bit. This is, you need to first add or deduct the prepayment or financing to the lease liab before you compare it with the fair value. Okay? Merong konting edits na gagawin. And right after that, everything else is the same except for the last component. Adjusted total gain po ang imumultiply natin compared to the previous one wherein we only use gain on sale. Ano yung adjusted total gain? Well, gain on sale is simply selling price minus carrying amount, di ba? Pero guys, in a leaseback, you can only recognize gain up to the extent of fair value and not the selling price. So, kapag hindi equal ang selling price at fair value, I would advise always use fair value. Okay, fair value takes priority over selling price in sale and leaseback. Such that, kung ordinary sale lang to, di ba? Meron tayong gain on sale. Ordinary sale will have recognized selling price minus carrying amount. Ito dapat ang gain on sale natin. Pero do take note again, this information is not useful when it comes to sale and leaseback. We will use adjusted total gain. In fact, guys, to be safe lang kung given ang fair value, yun yung palagi mong gagamitin. As a rule. When you are computing anything in sale and leaseback. Gain on rights transferred will be equal to the fair value of the asset minus the liability plus prepayment. Ilagay ko na lang siguro sa component dito. Anyway, blank naman to. So nothing will be added. Minus financing. Close parenthesis. Yan. All of this will be divided by the asset fair value. And let me encase it in another parenthesis because alams na ulit, PEMDAS. After you get the product of this, you will have to multiply everything by our adjusted total gain. Right after you get the amount, 59,954 as our gain on rights transferred. The 59,954, guys, is actually a portion of the 100,000. Okay, we only take a portion of the 100,000 that relates to rights transferred. I know the formula is a bit complicated pero I can explain that much. Kinuha mo lang ang portion ng 100,000 na nagre-relate sa kung anong rights ang na-transfer natin. Okay? I will not be illustrating any more prepayment since if prepayment, guys, you will only have to input the data here. Okay? Basta alam mo na kung ano gagawin. The same formula will apply except this time instead of deduct, i-add mo. The same goes for ROA. Instead of deducting, i-add mo. Ulit di ko na po i-illustrate yan. Instead, we will proceed to your handout. We'll find a little bit of problems wherein maybe we can apply the new learning that you have right now. The right of use asset and the gain on rights transferred. But let me give you a final glance of how the formula is so that you can screenshot. Ito po yung formula natin for ROA, yung complete formula. And this is our complete formula for gain on rights transferred. Now to proceed to your handout. Okay guys, now before we head into the problems in our handouts, I would just like to point out the provisions of PAS 17 about sale and leaseback, to which ang nakalagay po dito are the rules on what happens to the gain or loss in the sale and leaseback for when finance lease or operating lease ang magiging resulting na leaseback. Okay, so earlier, the problems that we had were based on IFRS 16 na nag-a-assume na in most cases, ang lease po na magre-result based on the accounting ni lessee will be finance lease. Pero of course, we should not also exclude the possibility na in a problem, there could be a resulting operating lease from a leaseback. Okay? Please disregard the provision up here since meron na po tayong clear guidance on finance lease accounting under our IFRS 16. But in PAS 17, ito po yung provisions kung ang isang leaseback mag-result in an operating lease. So for a transaction that results in an operating lease, if the transaction is clearly carried out at fair value, the profit or loss should be recognized immediately. Ano ibig sabihin neto? Sabi daw, if it is carried out at fair value. If the selling price is equal to the fair value, kung naibenta natin yung asset at its fair value, all of the profit or the selling price minus carrying amount, lahat ng gain na yan, i-recognize natin immediately. However, if the sales price is below the fair value, mas mababa po ang sales price kaysa sa fair value, ang mangyayari dito is the profit or loss is also immediately recognized except if a loss is compensated for by future rentals at below market price. So, ibig sabihin neto, if the sale results in a loss, tapos yung loss, it has been compensated by future rentals. Meaning, naibenta ko siya at a lower amount for the current sale because in the leaseback, nag-agree kami na, okay, sige, since naibenta ko sa'yo ng mas mababa, siguro mas may hustisya kung i-reduce natin yung rentals for the future para ma-compensate. Ganun ang naging agreement. Kung ganito ang naging agreement, the loss, it should be amortized over the period of use. So, amortized, magiging deferred loss po. So, meaning if 10 years, that loss will be amortized for the 10 years. If the sales price is above fair value, the excess over fair value should be deferred and amortized over the period of use. Okay, so kung ganito daw ang situation, sales price is greater than fair value. Ang difference ng fair value and sales price, you will have to recognize that as amortization over the period of the lease. So if it's a gain, the difference between the two will be amortized as a gain over the lease term. And lastly, if the fair value at the time of transaction is less than the carrying amount, a loss to the difference should be recognized immediately. So, kung i-compare mo, mas mababa ang fair value sa carrying amount, immediate recognition po ang gagawin natin sa loss na to. All of this can be confusing, pero I hope we can apply some in the upcoming problems, right? I hope we can resolve this by looking into our problems in our handouts. So, let's proceed. So here we have, guys, our item 34 and 33, which is a simple application of what we talked about a moment ago, yung operating lease rules when it comes to leaseback. Ang tinatanong po dito sa number 33 is, what amount of deferred loss should the company recognize on June 30, 2016, assuming the future rental is equal or above market rate rental? And then what amount of deferred loss, pareho silang deferred loss, pero magkaibang situation. Same thing, pero assuming that the future rental is below market rate rental. Deferred loss below market rate rental, and deferred loss equal or above market rate rental. Okay, so ang situation po dito is Forest Company sold equipment with an estimated useful life of 10 years. tapos nag-leaseback siya for 5 years. We are forest company. The equipment's carrying amount was 540,000. The sales price was 516,000. And the fair value of the equipment was 558,000. So the fair value is greater than the sales price, while carrying amount was equal to 540,000. Okay, let us look at the rules so we can decide kung ano ba ang ifa-follow natin. So ito po yung rules natin guys on operating lease, and we figured that in the problem, the sales price is actually less than the fair value. So I picked out the important things in that problem, and ito po yung comparison. Selling price is 516, fair value is 558, and the carrying amount is 540. Let's verify. For transparency, ito po. Carrying amount 540. Tapos meron tayo sales price 516 and the fair value of 558. Okay, looking back on the rules. Selling price is less than fair value because look at that, 516 and 558. And when that is the case now, if the sales price is below fair value, the profit or loss should be recognized immediately. Dapat immediate recognition. Pero may exception tayo, except if a loss is compensated for by future rentals at below market price. So kung yung future rentals na mag-a-arise from this leaseback will be below market price, then the loss should be amortized over the period of use. Okay? But if it's not below the market price, the loss is immediately recognized. Now let's get back to item number 33 to 34. Our scenario here is that tinatanong sa atin ano ang deferred loss, and we are on a situation wherein the selling price is less than fair value. In which case, dapat ang loss is immediately recognized unless there is a below market rate rental for the future. Pero in number 33, the rental is above or equal to the market rate. That means that all of the loss that will be computed will have to be recognized immediately. And so, nothing will be deferred. In that case, our answer is letter A, none. No part of the loss will be deferred. This is going to be a different scenario when we talk about number 34, because there is only one difference in the manner of questioning. And that is number 34, binigay po yung below market rate. Pareho pa rin ang situation, pero how about daw kung yung rentals in the future will be below market rate? Ano daw yung deferred loss? So, let's compute. Deferred loss will be equal to the carrying amount of 540,000 and the selling price of 516. So, ima-minus ko lang po ang 540 minus 516. We have 24,000 as our potential loss because it's recorded in our books at 540, but we only received cash or proceeds of 516. That leads us to a 24,000 loss. Under number 33, this loss is immediately recognized. Pero, if it is below market rate rental for the future, we will have to pick letter C because this one will be deferred. Meaning, whatever is the lease term, say 5 years, the 24,000 will be deferred for 5 years, meaning it will be recognized as a loss equivalent or proportionately over 5 years. Meaning, pag year-end natin for the current fiscal year or calendar year, merong 4,800 na i-recognize na loss for year 1. That will be the same loss for year 2, 3, 4, 5, and yun na. Hanggang maubos ang 24,000. I-defer natin si 24,000. So, these are your answers. It's a purely theoretical question for number 33 and 34. So, to proceed to next items. So, here we have our final problem, guys, number 35 and 36. Spoiler alert na lang, i-spoiler ko na lang kayo. This one is also oriented on an operating lease type. Unfortunately, wala po sa handout natin yung finance lease na problem, pero I hope I already shared enough about finance lease a while ago, Dito, 35 to 36. Ang tanong po, if the equipment's fair value on March 31, 2016 was 710,000, how much gain shall be recognized from this sale and leaseback? So, gain from the sale and leaseback ang tinatanong. For the year ended December 31, 2016. We'll see. And number 36 naman, if 800,000 daw yung fair value, how much gain will be recognized from the sale and leaseback for the year ended December 31, 2016? Okay, let's take a closer look at number 35 muna. Let me clear out the unnecessary highlights. Number 35, fair value of 710. Also in the problem, so to read, to raise operating funds of National Distribution Company, National Distribution Company sold its equipment to an insurance company on March 31, 2016. So, ang time of sale is March 31 for 800,000. 800,000 selling price, 710,000 fair value. Pagkatapos, may leaseback na nangyari. Okay, March 31, may leaseback, binenta 800,000. The lease is for the final 12 years of the asset's total 25-year useful life. Meaning 12 years na lang po ang remaining life ng asset natin, pero nilease natin siya for that remaining life. The equipment has a carrying value of 650,000. So we have the three important figures, the carrying value, the selling price, and the fair value. And the rental payment of 100,000 are payable each March 31, 2016. Siguro it is payable on and every March 2016 onwards. On March 31, 2016 and every March 31 onwards. So in advance pa ang rental payments. Okay. Here. Actually guys, when I look at the problem on a big picture, this should have been a finance lease. Just to be honest with you. Finance lease dapat to. Pero, what is a hint, sir, that we can see na hindi ito finance lease? The first hint is kung ano ang tinatanong sa problem. Okay? Well, sir, gain naman yung tinatanong. And there is gain on rights transferred sa finance lease. Yes, I agree with you. Pero have you ever seen an interest rate there so that you can compute the present value for your lease liability or right of use asset? Walang interest rate na given. And there are no other clues that would prove otherwise na finance lease nga talaga to. Walang iba. Sometimes you will just have to infer from the intention of the problem kung finance lease or operating lease ba siya. And an obvious way of concluding na hindi to finance lease is if it's impossible to compute present values or if it's not given ang mga present values. And this is one example of that, which is why I conclude this to be an operating lease. That being said, we will now have to focus on number 35, to which kailangan natin i-recognize, i-compute kung magkano yung gain, Fair value of 710 and the selling price is 800,000. Selling price is greater than fair value and the fair value is greater than the carrying amount. So with that, let us look at the rules once more. Here we are. Our situation, why did I erase that? Our situation right now is selling price is greater than fair value, which is the third bullet. And when that is the case, sabi, the excess over fair value should be deferred and amortized over the period of use. What does that mean? To explain that, we should look at our problem first. Let's take a look at this, our problem again. So selling price, their difference daw will have to be deferred. Eto, we are going to compare our selling price with the fair value. Ito yung selling price natin and fair value. And in those rules, sinabi na kapag greater daw ang selling price, their difference will have to be deferred. That means 90,000 will have to be deferred. Okay? Ibig sabihin, the 90,000 will be recognized for over 12 years. So, if you want to get the gain from that deferred gain na mare-recognize natin for December 31, 2016 in order to answer number 35, we will have to allocate that 90,000. But first, let's have an overview of how all of this will look like. I have here a solution guide that I am going to present to you. Una, we know that our problem has a selling price of 800,000 and that the fair value is 710,000. Their difference is 90,000. It will be a gain that is going to be deferred for 12 years. Okay? So, yung 90,000 na yan, kailangan natin yan i-allocate. And also take note that in our problem, we started March 31 and it's asking for December 31, 2016. So, hahanapin natin yung 9 months ng 90,000. Do take note, the 90,000 is going to be allocated for 12 years as well. So, keep up. Selling price of 800,000, i-compare natin yan with the carrying amount. Ano to? This is actually gain on sale, diba? That's what we call the total gain. Pero of that total gain, because there is a rule on deferred gains, this total gain cannot be recognized immediately yet. You need to separate the gain that relates to deferred gain in order for you to get the amount of gain that will be recognized immediately. So this one, what you have here is a gain that will be included in our computation for December 31, 2016. Gain recognized on December 31, 2016. Okay? We will also have to consider what portion of the 90,000 or the deferred gain will be included in December 31, 2016. For that, we will have to do some math. 12 years, diba? The term is 12 years. Which means that the 90,000 will be divided by 12. Para makuha natin ano yung annual na i-recognize na gain for the purpose of this deferred gain na 90,000. But also do take note that the deferred gain to be recognized should only be for March 2016 up to December 2016. Take note, it's March 31, 2016. So that does not include March. Ibig sabihin, if I would count the months, that is 12 years, 9 over 12. Computing right now, the 7.5 na annual, you will have to multiply it by 9 months over 12. Para makuha po natin ano yung amount of gain that is the amortization ng 90,000 for 2016. 9 months is 5,625. And, when I add that, I will get na minus ko tuloy. Yan. 65,625 as our gain on December 2016. This is our solution for number 35. Answer? Letter B. And now for the last item, guys. This one is easier than number 35. Yung number 35, meron lang tayo kasi konting roadblock kasi we can't recognize the total gain of 150,000 because of this impediment. Meron tayong criteria na kailangan i-follow. May gain of that 150,000, merong gain na kailangan ma-defer. Pero when we look at number 36, guys, the situation is, what if the fair value is 800,000? Let me clean up our spreadsheet para makafocus tayo sa important details. What if we have 800,000 as the fair value? And do take note that is equal to our selling price. Ano daw ang mangyayari? Let us look again at the rules. When the selling price is equal to fair value, you don't have a problem because the profit or loss should be recognized immediately. If the transaction is clearly carried out at fair value, meaning it was sold at fair value, any profit or loss will be recorded immediately. Meaning, sa number 36 po, eto, if I were to compare the selling price of 800,000 against the carrying amount of 650,000, 800 minus 650, this much is recognized immediately. Your answer for number 36 is letter D. Just take note that if it's a operating lease, you will have to follow the set of rules that I kept on coming back to earlier. But if it's a finance lease, do remember you have only a difference in your ROA and the gain on rights transferred na computations. That being said, guys, this is your Sir Kevin and thank you for watching this video. I will see you again in our next lecture. Bye-bye.